nice, I thought. All right, first speech of the day, that will be done by John Stanton. And Bob Avalon, and you are the evaluator, and you will read the speech objectives first.
The president has asked me to correct people when they pronounce my name incorrectly. It's Avalone is how I pronounce it.
Avalone, okay,
So,
thank you. Sorry.
Anyways, John's title speech is the speech number 4 from the manual, How to Say It. Title is Accountant Speaks. Book objectives are select the right words in sentence structure to communicate ideas clearly and accurately and vividly. Eliminate jargon and unnecessary words. Use correct grammar. Personal objectives. Continue to practice cadence of speech. Shake off the rust of being absent for a while. Content is helpful and content, is helpful and believable. And the time is 5 to 7 minutes. So good luck, John.
Right. So before I welcome John, I see that the second evaluator is missing. I only realized that now. Anyone willing to take?
I'll do it if nobody else will.
Okay. So Robert,
You want to do it, Brendan?
No, sorry.
Okay, Robert, you are the one. Okay, cool. Thanks. All right, please welcome John. And
Good afternoon. So I thought today I would deviate from some of my previous speeches where it was the traditional speech format, intro, content, and then conclusion. Today I wanted to just do what I call accountant speak. As you know, I'm in the accounting industry, and I wanted to give you all three topics that I find useful in my day-to-day activities in accounting, and hopefully it'll be useful in your own either personal life or business life. The first topic I wanted to cover today is record keeping and the importance of record keeping. It's important to have timely and accurate records, both on an individual level and also on a business level. You should take the time to reconcile your bank statements each month. I know that nobody likes to do that, but it's important because things drop out that you may have missed. It's important to organize your deductions or your expenses so that when you need them at the end of the year, they're there and you're not scrambling to get them. I don't care if you do your record keeping by hand or whether you're comfortable on the computer and you use one of these money programs, or if you're in business and you use QuickBooks. But the important thing is to just get into a consistent pattern of really keeping track of your financial history. And it's useful. It's useful three ways. When you go see your CPA at the end of the year, your process with your CPA can be a lot more efficient. Instead of the CPA spending time gathering records and trying to assemble your records because they're disorderly, they can use the time to advise you on your tax matters, to advise you on your financial matters. It's useful if you have third-party relationships like a bank. It solidifies your banking relationship. If you go into a bank and your records are accurate and complete, that bank is going to look at you and think that you're a pretty good credit risk, rather than somebody that comes in just a mess. They're going to say, is this how you're carrying on your business? Why should I be your partner? Lastly, the IRS. If you're one of the lucky ones that get chosen by the IRS for a little audit, if you show up and your records are in order, the IRS definitely, they take form over substance. And it's backwards than what we really think. It's substance over form. The IRS, if you present something and it's in good form, you can lead that IRS agent through the process rather than them leading you through the process. So if you show up with accurate information, if you're chosen, it's going to be beneficial to you. The second topic I wanted to talk to you guys about was retirement. There's this saying, pay yourself first. We think pay yourself first, taking a salary. But you should pay yourself first on putting money away, too. This year, 2018, the tax law changed, and they took away a lot of our deductions. They're limiting our real estate tax deduction, they're limiting our state tax deduction, but they didn't limit retirement deductions. So every dollar that you're able to put into an IRA, or a simple IRA, or a 401k, it comes right off of your taxable income. And that's your money, so that when you go to get it later on in life, you've saved it. And in the retirement industry and in the investment industry, there's a concept called Rule of 72. The Rule of 72 in the financial world is it's the amount of time that it takes for your money to double. So for instance, if you're investing your money at 6%, you divide the 6 into 72, and your money will double every 12 years. If you're making 5%, your money doubles around 14 years. So that means every time you make a deposit into your retirement account, it's going to double in 12 years, 14 years. You do that every year. That's a pretty good nest egg to have, so that when you need it later in life, you can draw on it. The third concept I wanted to review with you is wills and proxies. We should each dust off the will, look at it, see if what your intent was years ago when you drafted it, whether that's your intent today. Life changes. Our objectives change. Our relationships change. And so if you've got an old will and you've got old language in there, it's not going to do your heirs any good as they're trying to sift through your thoughts that you had at that time. There's also another mechanism called a living will, which actually helps you when you're alive to demonstrate your wishes to your loved ones. So if you get sick, you've got it on paper, this is what I want to happen to me. It gives our heirs, it empowers our heirs to carry out your wishes, and then you use a durable power of attorney or a healthcare proxy to kind of give your loved ones some teeth so that they can act on your behalf. There we go, we're stumbling. The last thing I wanted to say is, burial. My wife and I are going through this right now. I'm her third husband, and she's my second wife. Life changes. I mean, where do you want to be buried? You got to have these discussions with your spouse or your significant other. You've got family histories, you've got family traditions that may be powerful in one family and not in another. You've got children from different spouses. If you're not on the same page when you pass, that's just a lot of angst for, again, your loved ones. So I brought that up. It's not really under wills and proxies, but it's under, I guess, life experiences. So I thought I would do is just take a few topics that I use and share them with you, and hopefully you have a takeaway from today's presentation.